This conference will now be recorded.
Good evening, ladies and gentlemen. It's Clueless Trading Frank. It's 9:21 p.m. on September 23rd, 2020. Welcome. This is our midweek Wednesday strategic webinars, and especially this particular one is a very critical one given all the circumstances and the movements that we're seeing in the market, and specifically on the downside, on the overall market. Even though we have had some great winners in the middle on different stocks, that's all posted in the real-time Twitter feed. I'm talking about the overall market. So I'm going to try to keep this short, show a couple of charts, and then we're out of here. All right, and then you guys decide what you need to do. On that note, full disclosure, this is purely for financial education, not for any solicitation or advice. These sessions are recorded, uploaded to the YouTube Clueless Trading YouTube channel, where you can and anyone else who can't be here tonight can review it at their own time. They're also uploaded within 25 minutes after the session ends, directly on the real-time Twitter feed, so anyone can click that and listen to it. All right, so let's get to it. Bottom, as I was just saying before the recording started, bear with me one second. The markets from an emotional and technical point of view are very, very close on a significant short-term bottom. What does that mean? That simply means that we get a sizable tradable bounce, and every single time that I've said that, and please review my past webinars and my real-time Twitter feeds, the markets had a 200 to 400 point bounce within the next 24 to 48 hours. I have no doubt in my mind, at least in my mind, that this will happen again. Now, that is not a recovery all the way to the top, simply saying it's a reflex bounce or a reflex rally, and in the media they call it a dead cat bounce. I don't care whether it's a dead cat or a reflex rally. I know that things I bought cheap, just the way I did on Friday and made out like a bandit on Monday, this week alone, and also on Tuesday, that's the way you do it. I am saying it again to remind all of you, this is a market of stocks, not a stock market. All right? I hope that especially a lot of new people understand what I'm saying. You stay selective. Until 1:30 p.m., we had stocks that were going through the roof. Okay, whether it's Carvana, whether it's Zoom, whether it's Teledoc, and all of them, we took down the profits. Then the other stuff that we got in, and we got in limited amounts, at least I did, that's the way I do my business, we're all down because of the downdraft that we saw in the market. We look at on the charts, which started around 2 p.m. Now, if somebody asked you, why did the market sell off like that? Does anyone have a clue? And I'm not saying that you guys have to, I'm just asking. Why did the market sell off from being up 150 points and then went down almost 600 points? That's a 700-point move from the top to the bottom. Anyone have an idea?
I don't.
On the rally?
I'm sorry, what?
Selling on the rally?
The what?
Did you hear me okay?
No, I can't hear you. That's why I said what?
Okay. No, the only thing I can think of is it's, it rallied and they sold, basically.
Okay, so why? Okay, let me just give you the straight out answer, and then this is something you're not going to hear on the news and all that stuff. It has to do with the U.S. dollar. When the U.S. dollar weakens, the markets rally, and the reason behind that is when the U.S. dollar is weak, it means that our great companies, which sell 70% of their products overseas to the global customers, they can buy it at a cheaper price. So a weaker U.S. dollar, which has been the case for a couple of weeks now, okay, is positive. That's one of the variables in the market, just so you know. So the U.S. dollar started to rally, and the market used that as a reason to initiate some sell programs, and these are automated sell programs. As I've been trying to teach you guys, these are all automated algorithmic high-frequency trading black box computers, which starts the selling. Selling begets selling. You know what that means, right? When like I said in the last webinar, the machine starts selling, stops get triggered, sell stops, there's more selling. Okay, and then fear creeps in. A lot of human traders, that's it, it's over, I'm getting out, that's it, it's finished. And that's because they're just looking at prices, right? They're just looking at prices. We're looking at technical charts. We're also looking at the different levels where we would like to buy things, and that's what we do. Now, this is a difficult market. I'm warning all of you. If you guys are not monitoring the screens closely, unless you're sitting on things which are going up very nicely, like Canada Goose and those other type of small cap companies that I've mentioned quite a few of their names, all right? Unless you're sitting on those on a longer term setup, like what's going to happen, 3 months from now, or what's going to happen 6 months from now, or 2 months from now, please do not, I warn you, do not trade this market actively. This market is beautiful. Why is it beautiful? Because it gives you a chance to become a real trader. It teaches you how to trade the charts. The charts did nothing really wrong. If you remember from the last 2 webinars, specifically the last one, I talked about something called the Fib 50. Can somebody tell me what that is? I explained it thoroughly, that the markets would bounce from the Monday lows, that the markets would bounce up to the Fib 50, FIB 50. No one knows, right?
I remember the concept, it's just a little hard to explain.
I'm not asking you for a definition. I'm asking you for the Fib 50. I will let you go because you're new. You're learning fast. Matt, Mike, Rob, you guys
Retracement level.
huh?
It's a retracement level.
Well, why don't you explain not explain, what is Fib? What does the FIB mean? What's the full word?
Fibonacci.
Thank you very much. Thank you for the answer. It's called the Fibonacci 50 level. Exactly. Anytime I explain it very simple, and Luis, you shouldn't have any doubt in your mind because I explained it very clearly. And please go listen to the webinar again. That's how you learn how to make money in this business. That's how you learn how to make the FU money in this business. I explained it very, very clearly that anytime there's a massive drop, pull back in the market, or a massive rip up on the markets will always retrace back 50% of those gains. Or if there's a big pullback in the market, this is a big pullback. These are the Fibonacci levels. This is not hard. Please don't make this hard for yourself because it's not. It's very easy. What you guys do in your own life is actually hard. This is not hard. Okay? I told you anytime there's a big pull up or a big pull down, pull back in the markets will retrace back 50% of that move. That is exactly what the markets did. So as a tactical trader, if you were trading, for example, the SPY or the indices like the pure market, then you would be on the SPY, you would be getting out right when it's coming and kissing the Fib 50. This Fib 50 was engaged at a pre-market, by the way, like before the markets open at 6:45 a.m. And this was what was it today? 23rd. And today was the 23rd, and the markets open right here. So right around there, you would basically get out of some positions, and some of our positions opened up nicely. Okay, that's the way it works. I don't make these things up. I drew this chart before. So basically the markets went up, hit the Fib 50 from a technical standpoint, not a human standpoint, okay? Because remember, humans, we all are emotional freaks. And some of us are more emotional, some of, not me necessarily, but a lot of you are real emotional freaks, okay? They're like, oh my God, it's all over. Kind of, it's either all over or like, let's go to the moon kind of thing. How about staying in the middle? How about trading the charts? Okay? And I know many of you are doing that more effectively. So bottom line is the markets hit the Fibonacci 50 level, and then it started to pull back. Now today's thing, we had multiple stocks. I repeat, please look through the Twitter feed, which we took nice profits on, whether it's Carvana, whether it's Zoom, whether it's Walmart. which I keep on buying, by the way. All right. And or Teladoc, TDOC, which was up 72% from yesterday's 72% ROI, return on investment, from yesterday's 3 p.m. buy alert. And I still believe the stock goes higher. So I sold it, left some, then rebought it back as it was pulling back. All right. So we hit the Fibonacci 50 level, and like magic, boom, the sell programs came in. Now what we have done is, as you can clearly see, and please, this is not hard. I repeat, I'm going to keep on saying that so you tell your brain it's not hard. You just have to look. What's happening here, Luis? What do you see on this chart? And I need to know from somebody who's brand new, who is very passionate to learn. What do you see on this chart?
It hit the same bottom as previous, so that's
Correct.
basically
Do you see a pattern?
on the bottom.
Okay. This is a significant bottom just from a couple of days ago. Then the markets rallied. It zigzagged up, but it rallied hard. And we hit that same bottom and we slipped slightly below that. And right now, after hours, futures are up 4.5. Do you know what futures are, Luis?
I was searching the other day to see what the difference between the future and the options are. From my understanding, it's you're betting on what the future price is going to be, but you have to purchase the stock in order to trade it.
No.
Oh,
Okay. No. Globex futures. That's your homework for tonight. Go to Investopedia or just Google Globex futures. You see me write that a lot on the thing, right? Globex futures are up this much, that much, right?
Yes.
Futures are basically an indication of what the markets are doing right now. Remember, the markets are 24/7. Right now, Asia's open, China open, then Australia is going to open. Australia opens first, and then Europe is going to open around 3 a.m. our morning. So futures are basically the S&P 500 derivative that you can trade as a futures trader, but you have to have a certain account. And I wouldn't recommend that you trade futures unless you really know what you're doing. But the futures are indicating how the markets are going to open up for the following morning. Okay? And I need you to basically self-educate yourself a little bit. And that's for all new members who are brand new, to type in Globex futures or E-minis, and you've seen these terms. Anytime you see a term on my real-time Twitter feed, Luis, Google it or go to Investopedia. Did you bookmark Investopedia or download the app on your iPhone yet?
Yes.
Excellent. That's a big plus. That's going to take you way up there. So just go in there and type in E-minis or Globex futures and read up on it. All right? Because what you said was kind of a correct answer, but it was kind of mixed up. All right? So there you go. So this is live, like it's live. Right now, futures are up 6.5. We were down 22, just about around 7 p.m. Right now, it's 9:34 p.m., and you can see the movement. This is a pattern. I don't know what's going to happen tomorrow. I do not control the markets. I can only have a educated, probable bet that the markets will have a reflex bounce. The reflex bounce is already in motion. Do you guys understand what a reflex bounce is? Luis, do you understand the word a reflex bounce?
I understand the word, and I could kind of see the concept, just how it did previously. It bounced up, then hit bottom, and then it bounced
Right.
back.
The reflex bounce simply means that every action in life has an equal and opposite reaction. That's one of the laws of physics. Okay, Sir Isaac Newton.
Newton's law.
Okay, every action has an equal and opposite reaction. So when things fall hard in the market and things get really oversold, that means things got cheap, you tend to get a move up. It's known as a bounce, a reflex rally. We are getting a reflex rally in the Globex futures market right now, in the overseas market, despite the fact that we ended down 525 points on the Dow. and all 11 sectors of the market, all different 11 industry sectors were totally down. I love it. That's called a washout. That's called a washout. They threw the baby out with the bathwater. Hopefully none of you ever do that. Okay? Exactly. So this is no joke. We had a 9-to-1, almost a 10-to-1 down day. That means there were 10 stocks down for one stock up. Advanced decline line. It was a 10-to-1 down day. These are generally washout conditions. These are generally when the people who were like, rah, 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 everything's just going higher, everything's going higher, everything's going higher, they just become quiet. Remember, the market will humble you. Don't care how smart you are, how rich you are, how tough you are, the market will humble you, but the market will make grown men and women cry. And that is kind of the stage we're in right now. The people who were here, for example, who are still members, who were very vocal, let's say, on the webinars, like, oh, everything's just going up, everything's going up. They are not here today, correct? They're not here today. I know. Why? Because they've been humbled by the market short term. That to me, and that to people who have been who understand behavioral psychology, is the sign of a short-term bottom. In other words, the fear has taken over the people who were just so bullish on the market. And there was nothing wrong that they were so bullish on the market. But I kept on warning. It is selective stocks, and the market, some people are getting a little too happy. When traders get too happy, the markets will humble you. Mark my words. When you get too sad, that's the time you need to buy. When you get too happy, that's the time you need to sell or reduce your long positions, i.e. the call options. Did you guys understand what I just said? Did you guys understand what I just said?
Yes.
Write those words down. I didn't make these things up, okay? The market right now is very close to a point of maximum fear. You turn on the TV, those guys on TV, all they're telling you, get out of the market. All right? That is the time that you want to start buying selective stocks. Stocks that are down 20+% from their highs, like Apple. Just to name one example. All right, we had a 10-to-1 down there called advanced decline line. That's another term Luis put up on the Investopedia called advanced decline line, the AD line. That means 10 stocks were down from one stock up. That is real, extreme readings. On Bloomberg today, Bloomberg, digital subscription, which I obviously, that's one of my sources of information. They had a article. You don't see these too often. It says extreme afternoon selling wave means few stocks spared in tumble. New York Stock Exchange tick index, which I just explained to you, registered lowest reading since June. More than 90% of stock index members dragged lower in afternoon sell-off. Now, for human traders, these are very scary things. For technical traders, these are great words I want to hear, like when it hits the mainstream media, because you get a 10-to-1 AD line on the downside. That means 10 lower to 1 up. That means things are getting washed out. The stock market is the only place that human beings will refuse to buy things cheap, but love to buy things higher. Whether it's in real estate or in the business of cars and stuff, high performance cars, for example, if somebody brings out a Porsche 911, GT3 and says, listen, I really need to sell this one for 25 grand, even though it's a $130,000 car.
Sold, I'm buying.
Exactly. In stock market is the only place when a stock falls from 130 down to 100, people just go hide in the bunkers under the cave, lie there, have a drink, but don't want to buy it on a 30% discount. Do you understand what I'm talking about?
Yes.
Exactly. The stock market, because and it's always been like that. It's always been like that. So I know I'm explaining basics to a lot of other people who have been trading in the market for a while, but I do think we are very close to a short-term bottom. And again, I'm trading 200 to 400 points in the market higher. I'm scalping. Look at my Twitter feed. Even though I couldn't be for personal reasons at my trading desk today, I was informing people directly off my iPhones as to what to do. And there were some powerful winners. And I'm sure some of you took advantage of it. So bottom line is, do we get back to the Fib 50, the Fibonacci 50? I don't know. I never know. Let the market dictate. I do believe we do. I don't think fundamentally anything has changed in the market. Yes, we don't have a stimulus bin because of the idiots both on the Democrats and the Republicans. Okay? And that would be fantastic. The markets would be up 1,000 points if we could get an agreement there. They did get the spending bill going, which is great. So we don't have a government shutdown. So that's fantastic. But then we have this war, tech war going on with China, which the market doesn't like. 3,400 US companies today sued the US government and the Trump administration for imposing massive tariffs on products that they can, that they can't sell to China or that they buy from China. 3,400 US companies, massive class action lawsuit. You think that's good for Trump's business image? I don't think so. Even though he's going to scream and shout and say, no, it's all great, Of course, pressure on the Chinese government is fine. But 3,400 United States companies, the biggest of the biggest names, Home Depot, FedEx, like you name it, sued the Trump administration today in federal court so that they could alleviate some of these tariffs and stuff so that they can bring in products from China without having to pay more or sell more to China. This is serious stuff going on. The market is obviously a little bit nervous about all this stuff. And I'm not saying like who's a Trump supporter, who's not. This is nothing political. I'm just talking business. Okay, so from a technical standpoint, indications are that we do have some oversold, washed out conditions. That means we could have a short-term fast rally as early as tomorrow. And of course, I'm going to take advantage of it, just the way it did here. This could happen. And each of these levels will get engaged. So please keep an eye on this chart. Any questions, ladies and gentlemen? Any questions? Please feel free to ask. I'm here, I'm here to, these webinars are for you guys, not for me. None? Okay. Let's take a look at this one. The reason traders are emotional, that includes all of us, is because we're dealing with real money. We're dealing with real money. Every dollar is a dollar. We're hustling daily. Okay? Every dollar is a dollar. Every 3,000 bucks we make is, thank God. And every $3,000 that not necessarily we lose, but it looks there on the paper, on your P&L, looks like, makes us feel like crap, correct? Yes or no?
Yes.
I don't know a single person who says, oh, I looked at my P&L, my profit and loss statement for the day, and I was down $6,000, even though, the charts looks like they're bottoming, and they go to bed saying, oh, I feel really great. No, I don't think so. I don't think so. All right? But the question is the discipline of looking ahead instead of just being in complete despair and depression like 90% of traders are right now. Not just on our service. Our service, my traders are actually pretty good because I've been training them for years now, since 2014, April 15, 2014, to think differently. Yeah, you might feel like very crap. I don't feel too good today with my P&L down after I was greatly up till 1 in the morning. 1 in the afternoon. And everything just went whoops. It started at 1 p.m. right there, 1 p.m. Bang, bang, bang. See you later. I didn't panic. I didn't sell. I nibbled that stuff, and that's what I put out there on my real-time Twitter feed. So hopefully some of you guys nibbled too. Did any of you guys buy some stuff at the lows? Asking a question, please. So let's be quick. Did any of you guys buy anything at the lows today, which was at which was around 2 p.m. Okay, guess you guys didn't, because if you did, I'd hear something. You guys can hear me, right, when I speak?
Yes.
Aside from you, Luis, you got the rest of you can hear me when I speak, right? Matt, Mike, Rob, is there a delay in me speaking and you guys hearing? Rob, Mike, Matt?
I can hear you.
So, quick question. When I ask a question, how come I don't get a response, like a yes or a no, or whatever? Anyway, forget it. That's not my problem, But I'm just curious, and it's kind of funny. All right. I thought there was maybe some like a lag effect or something. I'm saying something and you guys hear it 5 minutes later because I ask a question other than Luis, like no one answers. Like, okay, that's great. No problem. All right. So bottom line is, if you look at it, we are on a very defined pattern. These patterns are, and let me just get the pen. Thank you. We had a cup and handle here. Here's your cup. Here was the handle. We failed through the handle going back on the 9th of September. This is almost from the beginning of the month, all right? Then we did this. This is known as the inverse head and shoulder. Here's your head. Here's your left shoulder. Here's your right shoulder. We broke up above that, went higher, kept on going higher, then had a nice flash crash. Flash crashes simply mean things that happen very quickly, very fast, very furious. Okay? We call them flash crashes. So this flash crash lasted for about a day. Then we went up again. We were hoping it would do this. So it would be a W formation. Look, like a W formation. Okay, what we call it, dragon bullish. We don't call it, these are technical terms. But it didn't happen. It actually went like this. And then on Friday, we gave in. Last Friday. Today's Wednesday, right? Yeah, last Friday. So we gave in. Then we created another inverse head and shoulder, left shoulder, right shoulder, head, broke up above, went nicely higher till early, till markets were fine till, till early this morning. And then see you later. Now, this is the overall market. Individual stocks, different story. The Carvanas of the world, the Teladocs of the world, the Squares of the world, they were bouncing even though it was slightly down. Walmart was moving. Teladoc was moving. Luis, you're in the car business. You know Carvana?
Yes, I actually have a few people that purchase vehicles from them already.
Those guys are sick. That stock is nuts. They call it the Amazon of cars. Let me finish. A couple of years ago, they called it a scam. It's a father and son operation. I read the whole history. They're from Vegas, from Las Vegas, Garcia family. Okay, father and son operation. They called it a scam. Those guys proved to Wall Street and the world that they can do it, and now they're almost profitable. That stock is known as the Amazon for like online cars. It's not Car Gurus or CarMax and stuff. It's a combination of CarMax and Amazon. And more people, and they're getting more vehicles in the inventory as their business is going through the thing. And you're buying a frigging car through a vending machine. They're making the car buying process so easy, it's not a joke. And that stock will be a $500 stock going forward. I'm telling you right now. because nobody does what they do. Nobody. What other company sells a car through a vending machine delivered to your door? End of story. Of course, you can use the iPhone app too. All right, let's get there. So all those stocks are different story. They're different breed. So anyway, it also, after being up, succumbed to the selling pressure that started at 1 p.m. So now we have created another bottom. If this bottom holds, and I don't know yet, if this bottom holds, then we will have an attempted bounce back for another couple of 100 points on the Dow Jones Industrial Average towards this level here, which will be, obviously you can see here, there will be sell programs that come in because this will be another resistance or top. Are you guys clear about this? Rob, Mike, Matt, are you guys clear about this?
Yes.
Can you guys hear me, man? Rob, can you hear me? Why didn't you answer? All right, forget it. All right, so that's it. So bottom line is that we need to, I don't know if it's going to happen, but if it does happen, that's where we're going. So that's the reason why you need to follow the front end of the market, which is these kind of charts, the E-mini futures, okay, the SPYs, the SPX that I keep on showing during the day to manage your trades on the other side. It's really as simple as that. Now, let me show you what's happening on the background, what they call the canary in the coal mine. That's known as the VIX index. And please stop me anytime with any questions, please, please. I'm doing my job, and I want you guys to, really absorb a lot of things that I see, because overall, during these critical moments in the market, well, short-term critical moments in the market, when everybody's panicking, these tend to be very powerful projections and forecasts. Okay? You guys with me so far?
Yes.
Excellent. Now, let's do this. Again, I repeat, for everybody who's going to listen to this webinar and all of you, including great people who are here, this is not hard. Don't tell your brain it's hard. It's actually pretty goddamn easy. And I'm explaining it in very simple ways. You just have to get your eyes to look at these things, so it'll tell you the directional bias of the market. Okay? So you don't sit there just looking at a price saying, oh my God, everything's done. This is the VIX, the volatility index. Luis, who's brand new, do you understand what the VIX is?
No, but I already wrote it down, so search it.
Okay, I have explained the VIX. You've been on 2 or 3 webinars. You're not focusing. You need to focus a little bit more. Okay, the volatility index was explained very clearly on my last webinar too. I like you, that's why I'm telling you. Focus a little bit more. And please write it down. Look at the VIX is the opposite of the market. It's known as the fear index. It's the fear index. Okay. In other words, when the VIX goes down, that means the market is feeling less fearful. Market goes up. When the volatility index goes up, that means the market goes down. It's really as simple as that. It's just the opposite of the stock market. You understand that right now?
Yes.
It's very simple. When the volatility index, the VIX, goes higher, that means the market goes lower. Got it?
Yes.
Exactly. So the VIX basically since the 10th of September, which was 10 trading days ago, taking the weekends and stuff. This is what the VIX is doing. Now, if the VIX follows the same pattern, goes up to this line is your wall. It's called the resistance line. All right, this is the trading range. 31, 25, 31, or like approximately 31, and then 25. So if it hits that and starts to pull back like it's done every single time since early September, then in that case, that's where we get the 200 to 400 to 500 point bounce in the market. We did see a sell candle on the VIX. See the red one? So if it's doing that, then expect the VIX to come down, zigzag on its way, but come down, which means the market on the other side will go higher. I have no idea, but I believe that's what's going to happen within the next 24 to 48 hours going into Friday. We will get at least 1 to 2 days, couple of hours where the markets are going to rally. So the bottom line is the VIX is getting overbought. When you get overbought, that means it's getting expensive. You tend to come down, just the way it did here. See? Look. See? Boom. Overbought, all correlated with the VIX making a top. And it's quite overbought right now. I believe it will reset lower. It's all about things getting overbought and oversold. Just to win the human mind. You get too happy, that means your mind is a little bit too overbought. And the markets will teach you humility. If you don't sell at higher levels and take some nice profits, it'll get oversold. That means you're going to get depressed because you didn't sell. All right? The same thing shown in technical charts. Any questions on the VIX, please?
I had
Any
a question, Frank.
Go ahead. And I'm going to show you the daily VIX too. This is the hourly VIX. This is more short term. Go ahead, sir.
I've tracked the VIX in the overall index quite a few times during the day, and I've noticed sometimes the VIX also has the same drop. Like if the SPY drops and the VIX drops at the same time, I've seen cases of that.
Here's the answer to your question. That happens seldom. It did happen last week. If the VIX is down and the markets are down, that means we're definitively going to have a rally. It's kind of one of those things. The reason you're doing that is because you're using time frames which are too short. You're using 5 to 15 minutes, correct?
15 minutes in an hour.
Never use the 15-minute VIX. Okay, never use the 15-minute VIX. The VIX is a financial derivative. Don't use the 15-minute VIX. The best you can use is the 1-hour VIX, which will give you a more clearer signal on that. Just 1 hour, just letting you know. That's the reason I knew what you're going to ask me. I read your mind. Because if you're seeing that much of a correlation between the stock market and the VIX moving in the same direction, that means you're using time frames which are way too short. Understood?
Okay, thank you.
Yep, and more importantly, it's a very good question, by the way. Thank you. Who's that, Matt?
Yes.
Yeah. The other thing is always use the internals to look to see whether the VIX is overbought or oversold. Use the stochastics, which are one of the fastest ways to look at it. This has worked for me almost 90% of the time. Now, as you can see, the VIX still has room to move higher, and we could do that at the opening tomorrow. But if we don't break this, the VIX will come down, and that's when you jam in and buy some real choice stuff. Got it? Now, let's take a look at the VIX on the daily. Now, the VIX on the daily is a little bit more troublesome. That's the reason I'm not making any big forecast what's going to happen over the next 1 to 2 weeks or whatever. All right? The VIX on the daily is showing me that it has room to move up towards 36. Got it? And the VIX on the daily, the stochastics are quite oversold. So if it starts to turn, trust me, I'm going to reduce my positions big time in the overall market, and of course keep some of my long-term swing trades intact. Because there's always stocks that go up on a certain day when the markets are down, and you guys know that. And I try to showcase those and get into them as quickly as possible. All right? When you're buying Canada Goose, what the hell does it care about the VIX? Exactly. And I hope all of you have a position in Canada Goose. The calls are cheap, they move nicely, and somebody's going to buy that stock, and that chart looks fantastic. So it's not just about the market. Just because the market, I've told you repeatedly, the market is not fully correlated with every single stock. This is a stock picker's market. And I know sometimes I miss on certain stocks which are moving a lot higher even when the markets are down, like Zoom. And New York just found the big cluster of COVID-19 people in Brooklyn, obviously Brooklyn, for reasons I'm not going to say right now. Okay. So guess what the hell is going to happen with Teladoc and Zoom? They're going to go higher because Teladoc is telemedicine. And if that cluster spreads into New York City, the markets are going to drop. And just the way we did it back in March and April, we're going to buy the hell out of some of these powerful names, which go up when the virus spreads, which we don't want it to spread, obviously. So Zoom is one of them. Most powerful stock. Carvana too. Who the hell wants to go to a dealership and swipe their hands with crappy what do you call disinfectant? Or not disinfectant. Hand sanitizers. Okay, which itself, the dealer probably bought it off some other crappy store. It probably doesn't even work. Who wants to do that when you can sit there on your app and buy a car on Carvana, or just do it on a vending machine, which I haven't seen one, but they have it all around the country. Exactly. Okay. Or we buy some select COVID-19 vaccine names, which some of them haven't even been working that well. So, all right. So the VIX on the monthly is the daily, Matt, is telling me, and you guys can all see that there is a chance. This is why I think I know things are going to get real tricky as we get closer to, because look, November is going to be a mess with elections. You can write that down right now. Okay, it's going to be a mess. And so just be prepared for that. And middle of October is always very tricky because that's the end of the fiscal year for all the mutual funds and some big institutional funds. So there's a lot of movement around that time. So we have a small window here between now and early October where the markets are going to go higher. I want to make as much money as possible, then pull back a little bit, and I try to guide you guys as much as possible. Just letting you know, we have a very small window between now and the first part of October. Let's say the first week. After that, we can short the market a little bit. We have to watch the market very carefully because I think it's going to be a mess. But they don't make it easy. You could put like a big chunk of money shorting the market, and the next thing I've done that way back, and because the charts look all broken. And then what happens? The next morning, the market opens up 200 to 300 points, and my puts go to zero. So that's why I'm always quick on the short side. You understand the short and long side, Luis, right? As a new member?
Not quite.
Okay, if you don't, right now, cancel your membership. What the hell are you talking about? What the hell? Let me finish. Long means that you're buying a call option, or you want things to go higher. Short means that you're betting that something's going to go lower. You got to understand that simple concept. I know you knew the answer. I couldn't believe you gave me that silly answer. Write this down in your head right now. Long means you're long a call option, or you long the stock. That means you want the stock to go higher. You're long the market. You want the markets to go higher. Short means you're betting the markets are going to go lower, or you buy a put option. Is it clear?
Yes.
Exactly. I knew you knew the answer, but I was a little surprised, Anyway, it doesn't matter. Now, just get it clear. Long means long. These are basic terms you have to know because you've been in the market, before too. So there's no excuse. Okay? Gotta know. It's like saying A for apple. You don't know what an apple is, that's a different story, Long means you're long the market. You want the markets to go higher. Short means you're going to short the market. That means you're betting the markets are going to go lower. Both ways you can make money in this business. You can buy a call option when it comes to options, betting that the stock will go higher, or you can buy a put option betting the stock will go lower. You understand that part, obviously, right?
Yes.
So that's long and short. All right. So bottom line is when the VIX goes higher, the markets go lower. So the VIX right now looks like it still wants to go up till it gets really overbought. Now, Matt, this is on the daily. You see how clear my VIX charts are? Easy on the eye. You see that?
Yes.
Exactly. Now, the one that I showed you before was very short term. That was the 1 hour. So that's telling you it's getting overbought. But this one's telling me that, you know what, the market still got more downside left, not in a straight line, but after the next quick pop, whatever, they're going to sell it again. That's called predictive analysis. This is the one that's really scary for people who are just always want the market to go higher. This is just about to turn, the stochastics. When they turn like this and the VIX goes like this, the markets will be down 600, 700, 800 points, 1,000 points really fast. I believe that's coming sometime in the middle of October. End of story. Let's look at a couple of stocks and we'll wrap this up. Any questions on the VIX? Anyone? Okay, sounds good. Let me show you another chart of, these are very advanced charts. These are from Quad, QUODD. I told you that, the platform that they never paid for, so the screens never move on the show billions. So this is the same platform. I've been using it for years, back from my Wall Street days. So let me show you something interesting here, which is very bullish, actually, quite bullish, short term. I want you guys to focus a little bit. And when you're doing these webinars, I highly suggest that, if possible, you guys be in front of larger screens. It might make your life a lot easier, okay? Because it's all about visual trading. It's all about visual trading. Now, I'm seeing a couple of things here. Bear with me 1 second. I want you guys to actually keep an eye on the chart. Give me like a minute. I'll be back. I want you to look at a couple of things here. No, really, like, look. Not just glance, like, look. All right? Look at these patterns. Look at these lines. Most importantly, look at the stochastics, which is the overbought, oversold conditions. I even have markers there so that people can focus on the points that I'm trying to show. But most importantly, look at these patterns. And I'll be back in literally a minute. Please take a good look at it. I'm going to explain it, and I also have one or two questions. Our good friend George has arrived. George, that includes you. Look at this. Remember, you cannot survive as a trader if you are not understanding or really looking, not just glancing at technical charts. That's what keeps you alive in this business. Otherwise, this market will spit you out like no problem. All right? So please take a good look at it. I'll be back in a minute. Okay, I'm back. So you fine gentlemen, did you take a good look at this chart? George, yes or no?
Frank. Yes, Frank.
Oh, it's George. Oh, okay, okay. I thought it was another George. Hey, okay, good. Luis,
Yes, I was looking at it.
good. Not glancing. Look hard, like your life depends on it. Matt,
Yes.
good. Mike, Rob, you there? Rob, are you there? I see your mic's open. Maybe his mic's not working. All right. Let's get there. So what do you see here? Let's start off from the bottom. Remember, I can put out the fanciest charts in the world, most powerful charts in the world that'll make you a lot of money. But if you guys don't get it, you're going to lose money. So I need you guys to understand it. So key is, these are the stochastics showing you overbought, oversold conditions. I'm already giving you the answers. Every single time markets get oversold, they rally. These charts are 90% accurate. Of course, there are certain, times they're not. But I'll take 80 to 90% any day probability. Oversold, markets rally. These rallies can last any time for a couple of hours, for a day, or they could be multi-day. Oversold, markets rally. Oversold, markets rally.
Question, Frank.
Let me finish. Almost oversold. Almost fully oversold. Getting down here, the market should have a bounce towards these lines, which are the downtrend lines and such. Go ahead, George.
I was about to ask that the upward momentum is very short-lived because the general direction is bearish. Would that be correct?
Correct. That's exactly what I've been saying through the whole webinar. These are short-lived rallies. Buy the sell-off, sell the pops. Exactly.
Okay.
Now we're gonna. Yeah, you're absolutely correct, sir. This is what I've been repeating. You gotta keep an eye on the screen. Now, this doesn't mean every stock's gonna go down. There were days that the markets were down 500 points, and we had stocks that were up big time, like including the last day or two with Teladoc and Zoom. Okay, even Zoom was up like big today, till it pulled back, and I believe it's gonna bounce again. So I'm talking the general market direction. Yes, the downtrend line, this red line here, needs to be eradicated, negated, and that's when the markets go like this, and another, and then hits these supply zones, which are the sell zones. So if you're playing the SPY, this is the chart that you want to basically print and save on your screen using one of the screen capture programs. There are so many free ones out there. Even a Microsoft what do you call browser has that too. So I don't know whether or not it's going to be this or whether it's going to be this another pullback. All I know, we're getting deeply oversold, and that to me is money-making opportunity. Do you guys all understand that?
That's correct. Yes, sir.
Exactly. And these moves that I've shown repeatedly culminate into a 200 to 400 point rally that dissipates because this downtrend line has acted as formidable resistance. You guys understood that, what I just said?
Yes.
Or what the rest of you? Rob?
Yes.
Rob, I think your mic's not working because, I can hear it. That's the way you do it. This is a truly trading market. Truly trading market. I said that on multiple webinars from weeks ago. Between now and December is going to be a trader's market. And we're still going to mint money. But you got to buy the technical lows and sell the pops when it hits those levels. So if it goes here, for example, this line, the stochastics will turn up like this, just the way it did here, just the way it did here, just the way it did here. And that's a lot of money. That's when you see Apple up $4, You see Nvidia up $15. You see AMD up $3. You see Square up $6. So why not take that? What are we looking for? Listen, as a trader, I want you guys to understand this and mentally prepare. I mean, really change the way you think about the stock market. Don't look for perfection. Look for opportunities. Don't look for perfection. There is no perfection in the market. It's just opportunities, and those opportunities we detect through the charts. I want to be as clear as possible on that because I want to help all of you. I know it's hard. Of course it's hard. But that's where the money comes in. And I don't care if you make $20 or $200 or $2,000 or $20,000. Make the money on these bounces. Now you can also short the market. And I did buy some hedges today, and so time to time intraday I'll say, oh, buy these SPY puts, then they go up. But I cannot lie in bed with them because futures were down 22 points. Now they're up 5. That's a reversal. If the market was open right now, of almost 30 times 8, almost 240 points on the Dow Jones Industrial Average, just between 7 p.m. and right now. Did you guys understand what I said?
Yeah.
And that's the reason I can't buy a lot of puts. I mean, look, I'm not stupid. I'm not the smartest guy in the world either. Okay. And no solid professional trader is that smart. But I've been pretty right on a lot of things. So my point is, if I bought, let's say, $10,000 worth of puts on the SPY, and the market opens up here tomorrow, up 5 points on the S&P 500, on the Dow Jones Industrial, on the NASDAQ, it's up 10 points, futures I'm talking about. I'm going to lose 50% of the value.
Yeah.
Exactly. Don't let your emotions take you over to the point where you're just looking at prices. Focus on these charts. And it's not going to come naturally. You have to push yourself to do it. All right, let's move on. I put out a tweet yesterday. This guy that he follows me, I follow him on Instagram. The guy made $146,000 in Tesla. He's obviously a big trader, and he trades stocks. So, he got lucky on that. And I listened to his video for the first time. Did you see that tweet, you guys?
That was the one from Tesla?
Yes, exactly. Did you listen to him? I mean, just listen to him for 15 minutes. Yeah. Did anyone else bother listening to him? Good. My friend Luis here, who's a brand new member, I can assure you, with the training he's going to get, he's going to make you guys look like baby food in 2 months. Because he's got the hunger and the passion, and you guys, I don't know what you're doing. Why did I put that tweet up? To put that man down? He made $146,000 on Tesla. No, I just wanted you to see that video because I listened to that video as I was sitting on my patio on the waterfront late in the evening. He didn't even mention one single technical pattern. None. He just talked about these candles moving back and forth. Oh, you should get here and this and that. You heard that, Luis, right?
Yes, I was looking at it and
right there. I just said this whale. You know what a whale trader is? A whale trader is a guy's making like 6 figures a day. Okay? On one trade. Explains his monster trades without mentioning one single technical formation and naked charts without any structure. His charts have no structure. It just looks like candles moving up and down. And I said, unbelievable. And he's probably got like 1,000 members. I'm not putting him down. I'm simply saying the way I'm teaching you guys, the energy that I'm putting in, this is not fake bullshit. So you guys need to put in the same freaking energy and learn equally. I'm showing you structures. I'm showing you inverse head and shoulders. I'm showing you this and that. I'm drawing lines on the charts. I mean, what more can I do other than completely control the market? Yeah, I wish I could do that. No one controls the market. So wake up and smell the coffee, kids. All right. And other than Luis, no one even bothered listening to it. Great. Okay. So I can assure you, and I'm not trying to like, this is not a competition game. I want everyone to be successful. That this new member here, Luis, he's going to learn so much faster. It's not where you start, it's where you land up. Okay? Exactly. So good for you, Luis, man. Yeah. All right. So let's do this. So this is again looking like a nice pattern. I explained all that stuff. What was I going to show now? Oh yeah. So now we're going to look at a couple of charts. Let's do this. Stocks I like.
Nicola.
Nicola, this round is a loss, even though I know the stock will go higher. So I am going to buy Nicola options 6 months out. 6 months out. So while we have that on the screen, let's take a look at the weekly chart. This is the weekly chart of Nicola, and Nicola has had a lot of issues because their CEO just resigned or was let go, whatever. So from a point of where the stock is, I personally think that if their product is real, which I believe it is, then the stock is very buyable between 20 and 21 bucks. Let the disbelievers get out, and then we are looking at, on a longer term view, we are looking at a stock once they start delivering their trucks. Don't forget, GM put $11 billion or 11 million. I can't remember. No, I think it was 11 billion into the company. So they're not stupid, okay? So if General Motors says, okay, we're done with Nicola, forget it. I'm not even going to touch the stock ever. But for now, the stock bought around $19, I think is good for 38. That's 100% return on your money. Stocks in play right now. Carvana, and I'm showing you a little bit of the broader picture. Stock today was up to 227, 228. We made money on that. I sold it earlier, then I rebought it back, which I was down on end of the day because of the sell-off, the overall market. Okay, this is a very powerful pattern. Internals all good, and here's the best part. On the daily, this is a daily chart, so it has nothing to do with what's happening intraday or this and that. What is this, guys? What is this? Somebody step up and answer me, please.
Oversold?
No, that's a divergence. It's crossovers. It's changing
It's
direction.
not. There is no divergence here. This is a pure crossover up of the
Crossover.
MACD. Exactly. Your first answer was wrong. Second answer was right. Okay. When you see something like this and the first green candle, you want to buy the stock on every dip that you can, unless it turns out they were a fraud. Who knows? I mean, there's a whole bunch of companies out there who are short sellers,
MACD.
who basically write a report saying, oh, that guy was like, he was seen with a 13-year-old girl, like, at a truck stop. Like, all of a sudden the stock drops. Like, I'm sorry, but, these short sellers come up with all kinds of garbage information a lot of the times. You know how many times Tesla got attacked by Citron and the other guy, I forget his name, kept on shorting the stock when the stock was $100. Said it's a fraud. Elon Musk is a fraud. He'll never make those many cars. And the stock went up 10 times more. So there's these short selling firms which do that, but that's a different story. Those are things, I don't, that can just come from left field. So this is very powerful from a technical standpoint. You got a crossover and you got a green candle. So the red candles just went green in one single day when the stock went from 173 to 232. It was a $50, $57, $60 on a day that the markets were down. I wish I was here. But no, we got in here and we still made money. And this is a very bullish pattern because you can see the body of this candle is within the body of this green candle. I still believe the stock is good for 250 to 300, and I bought the cheap 300 call just for the hell of it. There is absolutely nothing wrong in this technical picture on Carvana. The stock doesn't even have to go to 300. It just has to move up dollar to dollar, and you see those cheap options move. Go ahead.
If I wanted an early entry, what time frame do you normally use? I see we're looking at the day here, and I would assume this would have rallied already for that day.
I'm sorry, what was your question? If you want a what?
If I want to look for an early entry for like the crossover and I'm seeing a green candle, should I always be looking at like the daily chart, or should I look at maybe
no, as I've said a zillion times, no. If you're looking to basically have a short-term trade on this type of stock, you look at the 15-minute, you look at the 1 hour.
Okay.
You look at the 15-minute, you look at the 1 hour. So this one, for example, opened up here. After this was Tuesday, this is Wednesday. Okay, so basically it went up. So you'll be looking at the 15 minutes and the 1 hour. And the daily just keeps you in focus if you're looking to keep it for for a while longer. You look at the 15-minute or the 1 hour. This is a 1 hour chart. Here's your 15-minute chart. Here's your 15-minute chart. The stock peaked at around 945, around 227, and then basically came down to 214, 219. So you can day trade this stock also. That's not a problem. But as you can see, it's all bull flags. Bull flags. Look. Bull flag. Luis, you know what a bull flag is by now, right?
Yes.
Good. So basically, this is a bull flag. There, bull flag. Bull flags generally tend to stick to the primary trend. The primary trend is higher. Once it consolidates a little bit, that's a simple word of saying some profit taking and the market pressure that came down today, then the stock continues on its original path, which is higher. This is a volatile stock, so you got to be kind of quick, but I like it a lot. Next one, Teladoc. Here is another stock which was up a lot, was going higher nicely till the market sell-off came. Okay, what is Teladoc? The ultimate company in the universe. Don't have to go to a doctor. Sit there, you do telemedicine. All right, so Teladoc on my charts is I'm looking for around 230 bucks. There is nothing in this chart which is telling me it can't go there. Look at the MACD. We got 2 green candles and a crossover. These things work 100% of the time. Now, there will be market volatility, but I'm just showing you, like when the internals go like this, the stock goes. Now, if you notice one thing here, the stock likes to trade in a range of prices, right? So what is that range? There's your range. The short-term range is 182, 185, and then this, and 231. So that's your short-term range right there. Broaden it out a little bit, 240. I'll take 240 on this stock. I'll make 400% of my money or more. So don't, this is a powerful range. You can see it just flows like a wave. So the next range, I believe, is 231. And if the market didn't sell off today, the stock, honestly, would have hit 230 today. Their numbers are going bonkers. Nobody does what they do. It's a first player advantage, first mover advantage. Okay? Square. Love this chart on Square. I remember, as a trader, if it opens up $5-6, I'll take that profit, move up to some cheaper calls. That's just the way you do it. Okay, but Square is good for $158. That's $9 from here. It was doing fine till the market. It was doing fine since Monday. I told you guys to buy it from last week, by the way, when the stock was 135 or whatever. It went to 158. I gave you $20 under the belt. Square went up 400% from Monday's lows. Those options, I even put it out there. Go on my Instagram, you'll see it. I highlight some of the big trades. It went from 40 cents to $3.30. You could have bought as much as you wanted. Maybe you bought it at $1. You could have sold it at $3. Same day. This is Monday. Bang. Today, it was doing fine till 10:30. Then the market started to give in, and it went down this much. I don't care. I'm a buyer of this stock. I did sell the pop. That's what I do because I'm not stupid. Look, I don't trust the market as far as you can throw it. And the market doesn't give a crap about us. Okay? And the market doesn't give a crap whether you have $1 million, $10 million in the bank, or $10,000 in the bank, or $10 in the bank. The market doesn't give a shit.
Question, Frank.
So 1 second, I haven't finished my sentence. So the bottom line is, don't expect the market to love you. You got to take what you get, and at the same time, keep an eye on the bigger picture. Now, why is Square so powerful? It's digital currencies, cashless payments. What was that country I just read, like on Bloomberg? Is eradicating cash. Everything's going to be digital. I'm like, whoa. Square and PayPal are in the forefront of that whole revolution. Go ahead with your question, George.
When you're looking at Square, obviously with the trend line, you said probably, I'm looking at this could go as high as 180, right? I mean, what expiration?
Listen, it's Square on the longer term will be a $200 stock. Mark my words. I mean, very soon, unless some bad news comes out on it. Okay. Yes, the high was 170. So the way I play it, because I'm humble, I know how powerful the market is. So I'm always humble when I'm trading the market. I'm playing for $5, $6, $10 a pop.
Okay.
And then, yeah, of course, if you want to put retirement money in Square, look, I'm not a financial advisor, but I would say, my humble opinion, you could buy the hell out of Square and just keep it for the next 2 years. The stock could be $600. Absolutely. The megaphone pattern, which I showed you guys on my Twitter feed too, pushes the stock to 204. Now, was that something that's going to happen tomorrow? No. That's something maybe in the next 2 months or so, when they come up with their next quarterly earnings. But whichever the case, I am trading these type of stocks for $5 to $10 a pop, option 70 to 100 to 150%. Or when we get these type of big, ugly sell-offs, I can buy them cheap, 40 cents, 50 cents, 60 cents, $1, while a lot of you are like, ordering colored diapers from Amazon. That's just, by the way, a way of saying like, shit scared, or whatever. I'm buying hard. I told you guys to buy hard, and bang, market reverses. I'm like, cha-ching, sell. All right. Now I showed you Carvana, Teladoc, Square, Apple. So Apple has, like George correctly pointed out on another chart, a positive divergence, my friend. Okay, so what is a positive divergence? That's telling you that your blood pressure ain't that bad, even though when you walked in the doctor's office, you look like shit. Okay, and the doctor checked your blood, did your blood test, and the blood test said you're pretty okay, but you maybe had a pretty crazy night out or whatever, or ate too many, too much spicy food or whatever. Okay, so that's called a positive divergence. In other words, you're going to live, relax, but in the meantime, you feel like crap. You got it? This is the daily chart of Apple. What's happening down here, boys? What's happening down here, Luis? What do you see? By now, you should really pick this up. What's happening here? That's your underlying blood pressure, the stochastics.
I'm
Write
seeing an
this word down.
oversold and bounce.
Exactly. It's an oversold crossover up. When did it get oversold? When the stock was where? Look at the price on the right.
106.
106.59. 106.59, right?
Yes.
Exactly. Next day, the stock went down to 103, which was 2 days ago, and then bounced. What was happening to this? Did it make a higher low or a lower low? This was the lowest it got to when the stock hit 106.59. Here, the stock hit 103. What happened to this line?
Crossed over, bounced up.
Correct. That means your underlying blood pressure, your cholesterol level, your, whatever, triglycerides, like everything, was actually pretty okay. Even though when you walked in the doctor's office, you thought you're going to die. Exactly. That means your underlying internals are doing better. While the stock made it lower, went down another $3. That is a positive divergence. Apple is still undergoing a positive divergence. I'm bullish on Apple. And there are reasons too. Their 5G phones are coming out. Look, Apple, the cheaper it gets, Apple pays a 6% dividend or something crazy like that. $3 forward dividend yield. 3%. You could buy, what do you get 3% in the bank? You could have $1 million in the bank. They're going to give you 0.1%. You get 3% on Apple just for holding the stock plus wherever it goes. Now, chart-wise, we could have it a little bit more downside, but I would say that the 103 holds. I think we're good to go. And this positive divergence is A-okay for me. Canada Goose. Who owns Canada Goose that I've been screaming about for the last week? As to your question, guys, this is not a silent moment. No one died here tonight.
I try to come in lower.
Does anyone own Canada Goose? Yes or no?
No.
What's wrong with you guys? Like, something's really mentally wrong for people who don't own Canada Goose. I told you guys to buy the calls at 40 cents, 50 cents.
Yes, you did.
Okay, the calls went to $1.28. That's 150% gain on your money. And then some of you complain, oh, I don't have that much money. Okay, fine. And you can buy something at 30 cents, 40 cents. What's wrong with some of you? I give up. Seriously, it's so pathetic. I don't even know where to laugh or cry. What's wrong with you? And you guys all want to play the big stocks, like, oh, let's play Tesla. Let's buy a $7 call that'll go to $3. And you can buy something at 40 cents that goes to $1.28 and then ends the day. Even today, Canada Goose was up 2%, and those calls were still up in the dollar range. Do you ever ask yourself when you guys go to bed, end of the day, what's wrong with some of you guys? Like, what's wrong in your head? I do. I ask myself a lot, like, hey man, what's wrong with you? Maybe that's why I'm a little bit smarter than most of you, because I really try to find out what's wrong with me. I don't think many of you guys do. So hilarious. Canada Goose, in my opinion, will get bought out. I don't know if it's going to get bought out. I think it will. This is a nice ascending triangle, bear flag breakout, and the stock is destined for 35. And 90%, most of you, other than one person here, doesn't own it. Please ask yourself what's wrong with you before you go to bed tonight, all right? And then ask the market what's wrong with the market. Nothing's wrong with the market. It's all in our head. The markets are do what they do. What's wrong is you. Okay, I learned that a long time ago. There's always opportunities to make money in the market, always. Look at this stock. Went to 30.67. Told you guys to buy the 30 calls. I flipped that out. Then I bought the 35 calls. Even those went up, and they're dirt cheap. Oh, exhausted, man. Okay, next. That's it. All right. Any other stock? Because I gotta go. It's 10:42 p.m. Too much time.
Walmart.
Going higher. Going higher. Okay. Today, Walmart went down solely because of the market. It was moving up nicely. Look at Walmart's internal. Beautiful, beautiful positive divergence. Moving higher. The MACDs are going to go green soon. That's the internals. Walmart's volume today was non-existent. Look at that. These were the days they were buying. The big boys were buying. They were buying here. They're buying here. Look at today. 7 million shares, but look at the size of the bar. Small. So it was forced selling because the market came down. Walmart, in my opinion, is $140, $142 stock. You just got to keep on rolling those calls, and you got to stick with it. I don't like this candle, but that candle was because of the market, for nothing else. Walmart's rolling out lots of great programs. Walmart is going to be part owner of TikTok. Walmart is hiring like 100,000 or something crazy people because the demand is going to be nuts going into the holiday season. So I like Walmart a lot. In fact, I think that Walmart is, from a cost of options, is one of the best trades out there, period. Period. What's going to happen? If there's a resurgence of COVID-19 because of this Brooklyn cluster, God help some people in Brooklyn, man, seriously. Some idiots in Brooklyn. I won't even mention names. I know exactly what's going on. Okay, what's going to happen? People are going to rush into Walmart to buy more things: sanitizers, masks, tomatoes. Like, stock up on food. Exactly. Walmart's a-okay. All right. Have a great evening. I'm glad that I did this session. I was pretty exhausted today, man. Seriously, I was really pissed at the market the way it sold off after 1 o'clock, 2 o'clock. I really was. I was swearing at it, and I had to do some other stuff. But I'm glad that I did it. It energized me. I hope it energized you guys. And that's basically it. You got to stay engaged in this game. You got to stay engaged in this game. You know, this is not a game that you just drop out and then, you know. And a lot of people are like a lot of retail traders out there, they're dropping out because they thought it was all an easy game. And then when it becomes tough, they drop out, which, like I said in my last webinar, is the best thing, is the bottoming process in the market. Even really bullish traders, like we have a bunch of them here, great people, they're not here because they're shit scared right now. That's exactly the way I want. I want people to be dead scared. That's when you get the best frigging prices. You think I'm making this up? That's when you get the best frigging prices. All right?
Thank you.
So always have some cash on the side. Try to get more cash, like leave it on the side. And believe me, because when the market turns, it's going to turn. And it's like I said, it's going to be short term. It's going to be short term. But who cares if it's short or long term? I don't give a hoot whether the market's up 3 months from now. I just want my money a week from now. I really don't care. I want my money tomorrow. I don't care what the market's going to do 3 months from now. Seriously, this is tactical trading. I have no idea what the market will do 3 months from now. The market will be down 10,000 points 3 months from now. I mean, going into November because of the crap that's coming. Exactly. So don't be like a fund manager, like, oh, is the market really going up 3 months from now? I don't give a crap, and neither should you. You should care about what the market is going to do within the next week or the next couple of days so you can make money. End of story. Have a great evening, gentlemen. Thank you so much.
Bye-bye.